Hello everyone and welcome back to the channel. In this video, we're breaking down the most important developments in crypto right now, from new regulatory shifts in the United States to surprising behavior from Bitcoin whales, and what the current chart structure could be telling us about the next big move in the market. There are a few signals forming right now that most people are completely ignoring, but they could have a major impact on where Bitcoin goes next. So let's dive right into it. Banks are suddenly pushing the US government to pass crypto regulation faster. Regulators are quietly changing their stance on privacy tools, and Bitcoin whales are behaving very differently from smaller traders. All of this is happening while Bitcoin is stuck in a massive consolidation. And what happens next could determine whether we see 80,000 or a drop towards 60,000. So let's break it down. Right now, major banks are reportedly pressuring Congress to move forward with clearer crypto regulation. And this is where things get interesting. Former CFTC chairman Christopher Giancarlo says a Clarity Act might actually be more important for banks than it is for crypto companies. Why? Because banks want to build payment systems using stablecoins. We're talking about faster global settlements, programmable money, and a completely new layer of financial infrastructure. But here's the problem. Large financial institutions can't just invest billions of dollars into new systems unless the legal framework is crystal clear. So while retail investors think regulation slows crypto down, in reality, clear regulation could unlock massive institutional adoption. If that happens, we could see banks integrating stable payment systems much faster than people expect. And now let's talk about something even more controversial, and that being crypto mixers. A new US Treasury report suggests these tools might actually have legitimate uses. Mixers allow users to obscure their transaction history on public blockchains, which helps protect financial privacy. But of course, critics say they're also used to hide stolen funds. That's exactly why in 2022, the US government sanctioned services like Tornado Cash and Blender. At the time, regulators accused them of facilitating money laundering. But now the tone seems to be shifting. Instead of outright banning privacy tools, regulators appear to be considering frameworks where mixers could operate legally, while still sharing certain information with authorities when necessary. If this approach moves forward, it would signal a major shift in how governments treat privacy infrastructure in crypto, not banning it, but regulating it. And now, let's take a look on what's happening on chain, because the behavior of large investors right now is extremely important. Short-term holders recently deposited around 823 Bitcoin into exchanges. At the same time, whale inflows dropped about $2.2 billion. And all this happened while Bitcoin was trading between 65,000 and 72,000. So what does that mean? It means the smaller market participants are the ones moving coins to exchanges. But the whales, the largest holders in the market, they're not rushing to sell. Historically, when whales stay quiet during volatility, it often signals reduced selling pressure from major players. And when that happens, price usually continues consolidating rather than immediately crashing. And finally, let's talk about Bitcoin. On a daily time frame, Bitcoin is still stuck inside a consolidation range. Recently, price pushed above the upper boundary of that range, but the reaction was immediate. Price was aggressively pushed back down, and two major bearish signals appeared right after that move. First, a bearish gap formed, which usually indicates strong selling pressure entering the market. Then we saw a full bearish engulfing candle, and that's when sellers completely absorbed the momentum from buyers. Right now, the price is interacting with a key area known as a bearish fair value gap. This is basically a price imbalance left behind when the market moved too quickly, and we're already seeing what could be a classic manipulation around this zone. If price breaks above this level and starts holding above it, the entire bearish scenario could be invalidated. In that case, Bitcoin could continue the uptrend with a potential target around 80,000. But right now, the higher probability scenario is still pointing in the opposite direction. The most important level to watch is the lower boundary of the consolidation, around 60k. If that level breaks, it could trigger the next major move down. So at the moment, the probabilities look something like this. About a 70% chance that Bitcoin breaks lower, and about a 30% chance that we see a breakout higher toward 80k. Either way, the market is clearly building pressure inside this range, and when Bitcoin finally breaks out of the consolidation like this, the move is usually explosive. So the real question is, does Bitcoin break down first, or does it surprise everyone and push toward a new all-time high? So right now, we're at a pretty critical moment for Bitcoin. Whales are staying relatively quiet, regulators are slowly shifting their tone toward crypto infrastructure, and the market is still building pressure inside this consolidation range. The big question now is whether Bitcoin breaks down towards 60,000 or if we get a surprise breakout towards 80,000. Let me know what you think in the comments. Are you expecting a breakdown or a continuation of the bull trend? And if you found this breakdown useful, make sure to like the video and consider subscribing so you don't miss the next market update. Thank you for watching, and I will see you in the next one.